Welcome back to Stacking Stocks, and thanks for tuning in. Tesla is poised to deliver the gift of high returns to its investors. The leader of the electric vehicle race has finally regained the momentum that it lost early in December. Indeed, Tesla's stock has been rising with only minimal downticks. Despite the growing number of analyst reports that predict a year of slower growth for the EV sector, recent developments have helped push Tesla back onto the road. Most recently, the company announced a new deal that promises to help streamline battery production. We're going to go over some bullish news about Tesla. On top of Tesla streamlining battery production, we have Morgan Stanley analyst Adam Jones stating he's seeing a massive potential for Tesla as we head into 2022. We'll go over some of the reasons why Adam Jones sees Tesla going to the upside and why he raised his price targets. We'll also discuss the overall stock market in detail in today's session. So let's get started. It's well known that battery production has posed many complications for the fast-growing EV sector. But recently, Tesla made a significant step as the company announced a deal with Australian graphite miner Syrah Resources. The latter will supply Tesla with its battery-ready graphite processed at its U.S. facility in Louisiana. The news is definitely a big catalyst for Tesla. Of course, the news also boosts the Australian company's position in the stock market. Both stocks have been rising, with Tesla stock shooting straight up and the small-cap Syrah rising significantly. While Tesla's gains are nowhere near as high as that of its new partner, investors should see this news for the bigger picture. What we see is a giant of the industry taking a step that will put it significantly ahead of its competitors. Indeed, this should help Tesla in its quest to conquer one of the challenges that it's faced throughout recent years. It's clear that investors see this deal as being quite beneficial to both companies, and they're not wrong. For a little-known mining company, the chance to partner with the EV leader likely means a ride to the top. This is especially true as Tesla streamlines its battery production process. Equally important is the fact that Tesla's decision comes not a moment too soon. There have been reports that a global graphite deficit is looming, and it's predicted to start as early as 2022. The material is critical in the production of EV batteries. However, 84% of its global supply is currently from China. Tesla's new partnership will enable it to remain well supplied throughout a difficult time. The EV sector may be in for slower growth in 2022, but that doesn't mean companies won't take steps to advance and prioritize innovative measures. Tesla is doing exactly that. Furthermore, this partnership will help secure its position of power for years to come as the graphite deficit takes shape. Moves like this should inspire investor confidence as Wall Street prepares for a less profitable year from EV stocks across the board. Tesla stock has seen its share of turbulence. However, the company is doing everything it can to prevent such patterns from repeating in 2022. Historically, the stock market usually performs very well as we approach a new year, and we believe Tesla has been putting up quite a performance recently. If the stock can continue going up and up, we see a massive Tesla potential move to the upside. Of course, there are other crucial things we need to be watching out for, like Elon Musk selling. And he's not done any kinds of sales since the last one he did on December 16th. So we certainly need to be watching out for any more sales coming in. Musk only has 3 million shares left to hit the 10% mark that he set. Now we'll see what he's going to do as we get into the new year. When you look at the super bullish Tesla news, we see that Morgan Stanley analyst Adam Jones is seeing a massive potential for Tesla as we begin the new year. He's been a Tesla advocate for some time now, and he had a price target for Tesla at around $900. But as of December, he raised it to $1,200, which is really good. And he's a top auto analyst, so that's massive bullish news for Tesla that shouldn't be taken lightly by investors. There are obviously several analysts coming out to state their concerns about Tesla, but we can also see a top analyst coming in to say that he's looking at a massive move for Tesla as we head into 2022. Adam Jones believes that whatever Elon Musk does with Tesla is profound, and that it's going to be really hard for any company to catch up with Tesla in their current form. The company certainly can't be counted out, but then according to Adam, that's what Elon Musk wants. He wants those companies to thrive. He's not looking to destroy any of them. He believes Elon Musk is making the other EV companies better. In a nutshell, the analysts expect Tesla to explode in 2022. Now, do you remember the time where there was a chip shortage? According to Nikkei, the global supply of chips has risen for the first time in over 9 months at leading suppliers. With demand still sky high, the short-term situation is still unclear, but that certainly doesn't bode well for the long term. Tesla's record third quarter brought its biggest 3-month windfall ever as the company announced that it turned a $1.6 billion profit. That's despite a global semiconductor shortage and delays in the rollout of the refreshed Model S sedan and Model X SUV. Tesla turned that profit on just over $13.7 billion in revenue and did it while its average sales price continued to drop due to the increasing popularity of the more affordable Model 3 sedan and Model Y SUV. Tesla has also continued to increase the profitability of those vehicles. The company said that the gross margin on its cars is up to nearly 30%, a figure that it's reached in a large part thanks to its efforts in China, as it recently started exporting low-cost models built there to other markets like Europe. Tesla's success in the third quarter stands in stark relief from the trouble other automakers have faced thanks to the chip shortage and larger global supply chain crunches. So we can see why many analysts and investors remain bullish on the stock. A variety of challenges, including semiconductor shortages, congestion at ports, and rolling blackouts, have been impacting Tesla's ability to keep factories running at full speed. But the company isn't succumbing to the prevailing challenges. Tesla announced the plans to invest up to $187.91 million to expand production capacity at its Shanghai factory. The expansion will allow Tesla to add 4,000 staff, taking the number of people the plant can employ to 19,000. Giga Berlin is rumored to be getting the green light soon, but Tesla expects Gigafactory Berlin to contribute more than 30,000 vehicles to Tesla's production during the first half of 2022. Giga Texas will probably follow soon after, and with both factories ramping up production next year, Tesla will finally have a factory in each of its biggest markets. PepsiCo is also expected to take delivery of Tesla electric trucks in the fourth quarter, way ahead of schedule. The Tesla semi-truck and Cybertruck, which have over 1 million pre-orders, are both expected to start production in late 2022 after the ramp-up of the Model Y in both Berlin and Austin. The Tesla semi-electric truck claims to be capable of running 500 miles on a charge and will be able to tow 80,000 pounds. The truck could even come with higher payload capacity as compared to its diesel-powered counterparts. It also claims that the electric truck will not break down in its first million miles of running. That's a crazy statement. So Tesla has been executing its activities successfully despite all the global challenges. Tesla has been delivering record after record each and every quarter. Well, maybe that's why many investors still remain bullish on the stock. Well, if you enjoyed today's video, remember to hit the notification bell for more updates. Don't forget to like, share, and subscribe. We'll see you next time right here on Stacking Stocks.